I was going over their bios, it was like, without question, I wouldn't do them justice by reading their bios. So what we're going to do is we dive into sports and investing. They're each going to share a little bit about who they are first, their backgrounds, and then we're going to dive right into how their companies are investing in our ecosystem. Collin?
Morning, everyone. Everyone hear me? Is the mic on? Yeah. Great. Collin here. I'm with the San Francisco 49ers. My role is threefold. One, I serve as the first touch point. There's a lot of technology that comes through the team. Two, I invest on behalf of ownership. And three, we attempt to incubate companies that can find the space in the sports world.
Hey guys, my name is Akshay. I am the Director of Strategy for the Philadelphia 76ers, the New Jersey Devils, and Crystal Palace. Similar to Collin, my role is both to figure out ways in which we can enhance our team's revenues, but then also creating new revenue streams for each one of the teams and for the ownership group. A lot of that has led to, as Tim talked about, things as varied as a business accelerator that we're running called the Innovation Lab, starting a fund that's going to be focused on sports media and entertainment investing, as well as doing individual team-specific deals.
Hi, Steve Griffin, founder of G5 Capital. I probably have the least experience on the panel in the sports space. Background is I'm a CPA, former Big Four transaction advisory practice guy, so painfully boring numbers nerd doing due diligence, and then was an operating partner for a large cap private equity fund. Industry agnostic, never did anything in sports, media, or entertainment really. And then 5 years ago, we left and we created sort of a family office, a single family office called G5 Capital, and not a reference to a Gulfstream. My last name begins with G, and I have 3 children. And we fell into the space, made an investment about 5 years ago in an event company in the amateur sports space, and it's kind of been off to the races. We didn't realize how kind of frothy and exciting this landscape is, and I'm sure we'll fill you in more, but we look principally at the subcollegiate amateur sports market kind of across the entire ecosystem.
All right. Yeah, Demian, Costa. This thing on? You guys got it? So I manage the capital for the founder of Under Armour, Kevin Plank. We have a history that goes back a little over a decade. I started a company that did a lot of work with Under Armour, and then when I left that, I went to go help him stand up his family office as he started to get interests outside of Under Armour. And so he still very much spends 99.9% of his time running that great company. And what I do essentially is represent him in the entrepreneurial community. So I run Sagamore Ventures, which is the investment vehicle that we use to make direct investments in small startups, seed, Series A level. We've got a few other things that we run out of the family office, ranging from real estate to whiskey to all kinds of stuff. And so you'll see me pop up between acting as one of the funnels when you have a lot of this inbound traffic that's looking for some place at Under Armour. A lot of that comes through me, and then I try to help it navigate to the right person on the Under Armour side, and vice versa. So we've got a good relationship with the innovation folks over there and the varying groups that are looking at different companies like we're going to see today.
So what we're going to do now is dive into their companies. Collin, I want to know, with the 49ers, what are you guys doing? Kind of what's your business background in looking at investment opportunities in the sports world?
Sure. So we spend a lot of time thinking about the life cycle of a fan. So what's that person reading on Monday? What are they doing when they wake up before the game on Sunday? How are they parking? How are they leaving? How are they getting their information when they leave the stadium? Specifically, when we look at companies, we like companies to answer the question, why? Right? So why would someone order this? Why would someone buy this? Why would someone use this? And how does that fit into the overall structure of the team and the stadium and what we mean as a brand?
That makes sense. And Akshay, same for you. I mean, with the 76ers, what do you guys have going on over there? And what's the background kind of diving into sports?
Yeah, so our investment platform outside of just sort of traditional sports teams deals has been relatively new. It's somewhat been born off of 3 not great years on the court. Has allowed us to, on the business side, focus on a lot of external opportunities. And so for us, the big thing has been, in general in the sports industry, and this is something that we've seen over decades of experience for many of our senior execs, the industry just hasn't catered well to new companies that are coming in that are focused on either disrupting or enhancing sports technology as it stands. And that's really different than what a lot of my friends who work in tech, who work in consumer retail, who work in medical devices. Those are industries that are more catered towards that, and they have the infrastructure and they have the individuals looking at specifically which talented entrepreneurs are doing special things. And I think that's relatively new, with folks like Stadia, with what we're doing, with what the Niners are doing. It's relatively new to this industry, and we want to make sure that we're there to be able to make those connections. And frankly, a big rationale behind why we've invested in a business accelerator and why we're starting up a fund to do sort of Series A, B, C investments is there just aren't that many people out there who are doing that. And the deal flow that we're seeing and the number of incredibly talented entrepreneurs that we're seeing is on an inexorable trend towards in a positive direction. So we're really excited about that.
Oh, it's great to see what's happening within that space and that people are now identifying that, especially you guys. And Stephen, with your space not being so much, it wasn't sports, it wasn't entertainment, what made you guys go ahead and start going in that direction?
Well, we got lucky first. So the first investment we made was in an amateur baseball event operator. We like the event business because of sort of the economics first and foremost. To sound like a greedy capitalist, multiple revenue streams, sort of an inverted cash cycle. You get paid before the events. But no sooner did we invest, we started looking at how to enhance the events. And one of the things was we wanted to bring sort of Moneyball down to the amateur baseball market. We thought it would be, if nothing else, it would be a more compelling offer to the athlete, but also kind of a differentiator against competition. And we were surprised. Once we started bringing in this technology, the market kind of raised their hand. So, calls, no offense, calls from Nike and Wilson and Under Armour never called. But we can talk about it. So we started to realize, wait a minute, we made this investment, we're under the curtain, and we're seeing now the brands wanting a deeper access to the subcollegiate athlete, right? So unlike trying to get a sense of fan engagement and fan behavior for a professional franchise, we're looking at a different slice of the pyramid now, which is, wow, these are key influencers. These are athletes who travel to events, parents have the money to travel, etc. Really compelling demographic. And so we kind of pivoted our investment strategy and said, wait a minute, this is a pretty interesting thesis. Let's narrow it and look at what are all those touch points around the amateur athlete. And it is, you just touched on it. It is sports tech is a very broad space, right? It's fan engagement, it's medical diagnostic, it's performance improvement, it's everything. So we've narrowed it down to sort of how can we have this giant petri dish where we can access volumes of athletes, we can feed into those key influencers new technologies, new products, give a circular feedback to that company so they can enhance their offering. And then in a perfect world, we'll even own a piece of the megaphone to tell the story to the rest of the market about, hey, check out these new products and how well they work and how well received they are by the marketplace. So we've since made 6 other investments and had 2 exits and have 2 now under LOI, and they're all sort of clustered around that athlete.
In 5 years, you guys have accomplished quite a bit. Yeah. Demian, on your all's end, you've had an amazing background coming out of the military. Give us a little inside scoop of how you kind of made that transition into the sports investment realm.
Yeah, it wasn't the traditional path. I think being the founder of a company helped out quite a bit. Having to raise capital, it was a humbling experience. That helped out quite a bit. And then having a small amount of success, and then obviously meeting a billionaire worked out pretty well for me. So, but no, I think one of the things that's a little bit different. I think you see the panel up here. There's definitely a lot of diversity in the backgrounds and the focus, right? And a lot of what I do would probably have not quite as much interest to this crowd as it might if we were all out in Baltimore. We do have a very Baltimore-centric focus on the Kevin Plank personal investment side, and a lot of that has to do with what does the community around the actual headquarters of Under Armour look like, right? How hard is it for them to recruit? And by enhancing the city around that headquarters area, it allows us to make that job a little bit easier for them. So I spend a lot of time focusing on that, looking at the new campus, looking at the city around the new campus, bringing great companies to the region, investing in them. But sort of alongside of that, there is this for us, there was this pretty big phenomenon that happened with Under Armour a few years ago, and that's they made their first big acquisitions, and I think everyone's been pretty familiar with that. That's living under a rock, right? So they bought a bunch of some app companies. They spent quite a bit of money doing it. And when that happened, there was a massive influx, as you can imagine, of just general interest in, oh my goodness, you should take a look at this company, you should see this technology, this is how this could dovetail into the digital side. And the group was pretty swamped by it. So we've got some Under Armour folks here, Lloyd, that they can probably attest to it better than I can. And so on Kevin's personal side, that spiked as well, right? So his inbox spiked, his cell phone started to blow up, and of course he turned all that over to me and said, I got to run this company, you go, answer all these emails. And so I do spend a good amount of time trying to figure out, how do we, sift the wheat to the chaff, right? So we're getting inundated with tons and tons of requests every single day from, obviously really great companies, right? If you look at the networks that were created through these acquisitions, they're in Austin, they're in San Fran, and these places have a great, touch on some really good companies, right? So we're trying to figure out what's the process for analyzing these companies? How do we, make sure that we're not missing anything? We're not missing that phone call that I should have made, apparently. We're setting a process up to allow us to effectively screen and manage a lot of this inbound traffic, right? And so I do have a good relationship with the innovation team on the UA side, and I think that we're starting to see this, the screening process and these different funnels coalesce and come together. And that's one of the big reasons why I come out and do panels like this in St. Louis, right? So what the heck does St. Louis have to do with me making Baltimore a better place? Well, it gives me a chance to see some really cool companies that I otherwise wouldn't see if I just kept my head buried in the sand on the East Coast.
I'm sure we can give you a few more to add to that.
That'd be great. I'd love to. I'm planning on sticking around and driving some race cars and all that stuff. So.
Ned, you bring up a great point. When we're talking about investing in these sports companies, sports businesses, what are some of the criteria that you guys look for, and what is the key criteria you personally looking for in investing in these companies? Collin?
Yeah, so I like to think of it as the 3 T's. So probably the most important for me is the team. Who are the people? Can you feel the passion when they're talking to you about it? How did they get to the idea? Is it an idea they had, or is it rooted in a problem that they've experienced? That's very important to me. 2 is traction, right? So what have they done in the past? Have they been out there hustling, been meeting with people? Do they have a strategic partnership? How do they get to me right now? And the 3rd is trajectory. Where is this company going? How are we going to get there? And ultimately, one thing that we really pride ourselves in is the role we play in helping these companies grow, right? So by association with our Niners brand, can we give you signage in stadium? Can we activate you in one of our inbounds during one of our 20 events where we have 70,000 people per game? How can we play a role in those 3 T's? And then ultimately it's about execution on top of that. So can that person, can the team execute? Is there a clear path to execution? That's how I think about it.
Nice. What about you, Akshay?
Like the 3 T's.
It's actually,
I was about to start going on a riff on 3 T's, but
actually, I made it up myself. So.
Trademark it before I steal it. So I have this criteria. It's called the 3 T's. That's good. So I think for us, look, we're just getting started in this space. Is this mic working?
Yeah. Oh, you're
okay. Good. So we're just getting started in this space, and so for us, the big thing is, can we impact the business? So we've seen, we've taken a bunch of meetings now. We've gotten, we've been overwhelmed with applications for the Innovation Lab. But more generally, we get a ton of, similar to what Demian's saying. I'm sure Kevin Plank's inbox is blowing up. Similarly, we get a lot of investments or potential investments coming in because, again, they realize that most sports teams out there, unlike the Niners, aren't going to be sort of as progressive to fully understand the trends that are coming in and then put their money behind it. And so for us, we see a lot of companies that have great entrepreneurs that have incredible traction that we think would make incredible investments, but we shy away from because we don't think we can make an impact. And at the end of the day, what we're trying to do is we're not trying to make financial investments purely for the sake of great financial returns. Our owners are private equity guys, and they would rather put that money in their own funds. That's how much they believe in themselves. If that was all they were looking for. For us, it's really the ability to impact each company and make sure that we can take the companies, whether it's in terms of revenue, profitability, customer acquisition, whatever it might be, from here when they come in to here. And a lot of times that involves being able to expose them to our demographic, being able to give them access to our customer base, displaying them in arena where we're blessed to have some of the most captive audiences for anyone who's been to a Philadelphia sports game, the best fans in the world. I truly believe that, the most passionate fans in the world. And being able to, Art knows what I'm talking about. And being able to expose them to that, and then allowing the quality of the entrepreneur and the quality of the product to really shine through, goes back to my initial point, which was that in the industry, there just hasn't been enough people. There haven't been enough people taking the initiative to say, okay, we're blessed with this incredible exposure, this incredible access, and I really do think it's an unfair playing field in advantage of sports team owners and sports team executives, because we have such a head start over folks who are just entering the industry. We have all this customer data. We understand the trends of where things are going, and I think the daily fantasy industry, and putting aside the legal issues, I'm sure most of you guys here are sports fans, saw last September and October the impact of what collaboration within the sports industry can do for companies that boast talented entrepreneurs, that have a great product, that are things that our fans desire. And I mean, you saw the growth in the daily fantasy industry, and a lot of that was as a result of sports teams, of sports leagues, and sports properties putting their money behind their understanding of what fans want. And so at the end of the day, that's what we're looking for. We're looking for, can we make an impact? Can we team up with other teams and other leagues in the industry to make sure that we can put these entrepreneurs who already have all the talent in the world, and they just need that push, they need those introductions, they need that network, can we provide that for them?
Hi, you're literally seeing team at a whole nother level with collaboration. Steven, you're looking at it from a different hat coming in, looking at investment opportunities. Are you looking at it more from a numbers perspective? What's kind of your key criteria?
So we're not seed stage investors per se. So right off the top, it would have to be, pretty clear visibility to being positive EBITDA. I'm pausing because I know we're in a room where there's probably a lot of seed stage companies, but clear visibility to EBITDA, or at least a very controlled and predictable burn to get there. The first thing. The second thing is obviously we think it has to now, having shifted the investment strategy, we want it to have synergies with the other companies in some form. Not to sound hokey, but we are seeing benefits of that Keiretsu concept, where one company works well with the other, and on a smaller scale than what the professional owners can do. And then here's the real boring part. Management first and foremost. A really bad management team will screw it up fast. A really good management team will pivot here and there and figure out a way to make money. Second is a large addressable market for the product. Don't really want something that's too niche-y. Ideally, efficient and existing distribution channels in place. So how can we get this product or this application or this service quickly to the market? And then a really rich and compelling financial model. High margin, low working capital commitment kind of stuff.
I'm sure that's on the wish list for sure. Demian, you're looking at it from a different set of goggles too. Your background, what exactly is your criteria? If having a military background play into that at all?
Yeah, so I've been trying to bite my tongue, so I know Collin has three T's. We got 3 P's, so it's people, product, potential, right? So it's very similar, and you can extrapolate from there. But yeah, I think first and foremost, the team is great. You have to have the people behind it that make sense. But let's just dive in a little bit deeper. For me, the first real question that I would ask, and this is something that for the folks that are in there looking for capital, do yourself a favor and find out very quickly if you are a solution searching for a problem, right? And the best way to do that is to convince somebody to take money out of their pocket and hand it to you for your product or your service. And if you've done that, then I think that you've checked off a major box. So that really comes under the traction. We see it a lot in this sort of wearable space, and in this space, I think, unfortunately, you got a lot of folks out there who are creating these things, and they're great, and they sound great, and they say they're solving things, but is it really solving a real problem or a real need in the market? And if we can answer that, then I think that we're in good shape. Now, the military stuff, I don't know. I think it helps me try to find that good manager, I guess. But yeah, it's definitely. I don't sleep much, so that helps out.
With sports business, sports tech being such a hot topic right now, what are some of the trends you guys are seeing that's on your radar? I mean, we're seeing a lot right now with data analytics and player performance, talking about the wearables. What are some things that are just continuously coming on your plate?
Yeah, so Steve hit on a little bit. Youth sports is something I think about a lot. To your point, brands are very interested in this space. Read something earlier. Technical difficulties. Read something earlier. 40 million kids participate in youth sports right now. It's a huge market, and also spend a lot of time thinking about what's next. So I'm wearing a Fitbit right now. What does the Fitbit not do? Is this important? How many steps I take per day, is that relevant? Or is the metric G-force? Or is the metric hydration? What else is out there that's going to be important in 5 to 10 years? VR, virtual reality, is a little bit of a buzz right now. Are people really going to wear goggles for 2 hours and watch a football game? Or is it in 3-minute clips? AR, is there a space for someone to overlay an iPad on top of a game and see different statistics? Even something like battery life, right? So you have fans who come to games and they're on their phone. You're not there unless you Instagram it. Is your phone going to run out of battery in the middle of a game? There's a lot of verticals that play in the sports space that aren't obvious from day one. Will be very important in year 5.
Akshay, are you seeing anything outside of the?
Yeah, so I think a lot of what Collin talked about, we're seeing everything from data aggregation, virtual reality, mobile ticketing. I think the things that we're most excited about, so we're incredibly excited about the esports space. We think there's a lot of talent there, a lot of potential. The opportunity to get in, and this is, for people sort of scratching their heads, which is what I was doing 10 months ago, it's people watching other people play video games. And it's an incredible space. It's growing like gangbusters, and we think that there's an amazing opportunity there to get in early and really shape the future of an industry that could potentially be as big as any of the professional sports industries we know today. More people watched the finals of the League of Legends World Championship than the Super Bowl. More people watch I think that the number 1 gamer in the world has 2.5 times more Twitter followers than LeBron James. I mean, it's incredible. The numbers are breathtaking. At the same time, you need to figure out how best to monetize it, and I think that's been a little bit of a challenge, but with enough smart people in the room and with enough of a fan following, which is what it seems like both of these boxes are on their way to being checked, we're really excited about that space. And I think something that's a little bit more controversial, something that Commissioner Adam Silver has talked a lot about is, I think there's a belief among some teams and among some leagues that sort of the genie is out of the bottle with regards to sports betting. And you're seeing the first team in American professional sports moving to Las Vegas with the NHL expanding there. Obviously, all across the world, sports betting, for the most part, is legal. And as the United States sort of goes towards that, and I don't know whether it's going to be 2 years or 5 years or 10 years, there's going to be a number of data aggregation, sort of data supplying websites and apps and companies that are going to be incredibly valuable because, I think something like 9 out of 10 bets that are taken on sports in Asia are not, they're prop bets, so they're not on the outcome of the game, but they're on who's going to score the next layup and who's going to throw the next touchdown pass. And the ability to understand statistics on a much higher level, and you've seen some of that with daily fantasy, but where the stakes are so much higher, we think is really exciting. And it's sort of a legislative issue, which we do worry about a little bit, but we think that there is a trend that's not going to stop that goes in that direction.
No, I think you're right. We're seeing exactly those literally game-changing trends that's entering the sports market. And Stephen, how are you guys, and Demian, please feel free to chime in on this. How are you guys staying ahead of that? What are you doing to make sure you're looking into the future, trying to anticipate what's coming up?
Number one, I'm a really small player in this, so we're just opportunistic when we find the right company. But touching further on what you just said, or what you just referenced. The problem is a guy with a little bit of gray hair, or a lot of gray hair. That's typically who many of the executives look like me, and they don't live in the world that this generation lives in. And I look at my kids, and I try to make sure that I'm a little bit aware of what is happening and where markets are shifting. But I think that reeks of an opportunity, because I think there's a lot of big companies that are missing out on some of these opportunities, that this generation is accelerating growth in those businesses. So instead of getting into what kind of companies we're looking at, I would probably go a step up and say one of the kind of core beliefs we have is if you run parallel with passion, so you look at businesses or opportunities where your consumer is incredibly passionate, and ideally there's almost like an aspirational piece behind it where they want to continue to get better, they want to be more engaged with the team that they follow. If that's one side of the equation, and the other side is a physical world engagement in some fashion, but a digital tethering, then you got something pretty powerful, right? There's a great, I think it's a really good book that came out recently called Sweat Equity, and one of the case studies in there is around Iron Man, and when Providence Equity bought Iron Man, the main reason they got into it was exactly that. It is deeply passionate core group of users, and you get people who are putting the Iron Man tattoo on their ankle, for crying out loud, and they aspired to get better and better and better, and they had this incredible physical experience, but when they left, they kept training, they kept engaging with the brand. So the question being, what are we looking at? Where do we see trends? There's so many things in the market that are happening at the same time. I try to look at them and see if they have those features. Those are the investments we're going to pursue.
Got it, maybe. I mean, firsthand, sweat in the game, actually seeing that organic growth.
Yeah, I did an Iron Man. I didn't tattoo my ankle for it. It sucked. It's terrible.
Good advertising for Iron Man.
Yeah. No, I mean, look, I don't think I need to advertise for them. They got to figure it out. That's a really good example. Something that I noticed. I think we noticed. Let's take Iron Man and pit it against what's the Spartan race? What was the one? The Tough Mudder thing. And I think when Tough Mudder came on the scene, it was all the rage and it slowly sort of died down. But what I thought made the Iron Man so sticky was the metrics, right? So it's three very distinct sports, and there are all these different metrics that you can measure, and you can get better on your swim, you get better on your bike, you get better on your run, and you have that age group brackets, and you've got all these different competitive angles to it. Whereas Tough Mudder was kind of just a fad. I mean, you just sort of did it, and then you were done, and it sucked, and there was no time, and you weren't supposed to have a time, and it was kind of one of these things. And so I don't know. I thought that was kind of interesting. And Iron Man has sort of pursued, it's endured the test of time because it is measurable. And so when I think about, so let's take that metrics and let's talk about where we are today versus where I think that we're going to be going in the future. And another big explosion in the fad we have is in the wearable space, right? Everybody's got something on their wrist, I'm sure, in the room that measures steps and heart rates and all these other things. And so something that my boss said, which has stuck with me, and I think it's stuck with a lot of folks, is that data is the new oil, right? We're collecting an unprecedented amount of data on your everyday lives. Everyone says what you eat, what you do, how you're sleeping, how you're feeling, and all of that data is currently being compiled on platforms. Under Armour happens to control the largest of those platforms, which is actually kind of cool. But what I think is important about all of that is, at some point, we have to intersect that with the healthcare space, okay? And when that happens, then you're going to start seeing some true disruption, some true revolutionary stuff happen. Imagine for a second if all this stuff that you're wearing and doing on your body had a direct tie back to your primary care physician, who then, flipped the game around and they called you and they said, "Hey, Demian, I'm seeing some things I don't like. Why don't you come on in? I've got some space on Tuesday, Wednesday, and Friday at these times. Can you come in and schedule an appointment?" And how revolutionary that is, right? And versus today, where I feel under the weather, and so I wander in when I have time to see my guy, and he opens up this manila folder, and he's like, "Hey, so I don't know, what's going on? How you feeling?" I'm like, "Oh, doc, I'm not feeling well. That's why I'm here." So there's that, right? And I think it's down the road. But the first intersection of the data and healthcare side is probably going to be where, that monthly contribution I have to make for my healthcare premium is affected directly by what I'm actually doing, right? And so once the healthcare companies start saying, like, look, you know what, statistics and data tell me that if you're doing X number of steps and your heart rate is X, and you're working out X, and you're eating X, and you're feeling X, like, you're not gonna cost me as much money. So, you know what, I'm not gonna charge you as much for that contribution. I'm gonna give you a bit of a break. So I think that's where the first intersection will happen, and then where it goes from there is pretty extraordinary. So that's what, I'm looking at, I think what a lot of folks are looking at, and that's going to be really, really exciting.
That's major futuristic thinking, and we're watching rapid change literally happen before our eyes. And when you guys are looking at, investment opportunities, what is the difference of you going after a true startup versus looking at these later stage companies? Are you favoring one over the other? Are you leaning more to a later stage company because they have traction? Or are you willing to kind of gamble on these startups as an initial investment? Collin?
Yeah, for us, it's really where the value is. We're across all stages. It doesn't really matter to us. It's going to have to be a happy marriage, right? So when you call any one of us at the team, you're going to want us to answer. We're going to want to be happy to work together. So to the extent that it's a seed company with 2 guys and a cell phone, or a more mature company with reoccurring revenue, whatever makes sense is what we most care about. So we don't care about size necessarily, as long as it does fill that need, fill that fan pain point. Is it a gimmick or is it a real problem in stadium? Do fans want to have their pictures taken when someone scores a touchdown? We want to see something where we could work together, we could collaborate, we could innovate. We see Levi's as a petri dish as well. So to the extent the relationship is great on both sides, that's when we get really excited. It doesn't matter stage.
Good. Akshay?
Yeah, so we have different investment vehicles for different stages, but somewhat stage agnostic. What is interesting that I haven't seen elsewhere, and I've spoken to a couple of folks about this, and they're equally surprised, is the value proposition that's provided by being affiliated with, and I can only speak to sports teams, but I'm assuming this spreads wider to sports properties, to having Kevin Plank, beat his chest about kind of the value of whichever company is affiliated with Under Armour, whatever it might be, is so high from a non-monetary perspective, where we're getting later stage companies than I would typically think would be interested in the value proposition that we're providing for them, who are saying we're willing to take a step back in the fundraising process. We're willing to take what amounts to somewhat of a down round, although I actually disagree with the way investors would categorize that. But basically, we're willing to go back a stage because we think that the value of the connections, the value of the network, and the value of having the backing of a sports team in this particular industry, and I don't think it's as prevalent in other industries, going back to sort of our core investment thesis of the fact of the matter is that in this industry, teams and leagues still aren't at the point where they are adept at, and we certainly aren't, really good at identifying talent and at opening our doors to that talent. And so the few opportunities that exist, whether it's with the Dodgers, whether it's with the Niners, whether it's with us, are so rare and so few and far between that companies that are later stage are coming in the door and saying, hey, look, we're interested in partnering with you guys in some shape or form. We wouldn't do this with your standard venture capital firm or with your standard private equity shop, but in this particular instance, the networks you're able to provide are so unique and are worth so much from a non-monetary perspective, and then eventually, obviously, turning that into the ability to monetize the connections that they're making. I think that's been really interesting, but look, we're never going to turn a company away because they're too late or too early in their funding cycle. We may not be able to coalesce around the investment opportunity if we think that the risk is too high, which comes with going early. But simply on the basis of these guys having raised X capital, that's not a decision that we think that we either qualify to, or really, in my opinion, that we should be making.
No, it's legit. It's an open playing field. Stephen, are you guys the same? Is it pretty open?
Little narrower. So because of the kind of the composition of my portfolio, it's hard for me to do real early stage because of the risk profile. So ideally, some revenue, and the other benefit of revenue is it's impossible to know what's happening in the market. So these guys could have something going on at Under Armour that's absolutely going to destroy this company, and I don't even know it exists right now. At least if there's revenue generation at that company, I know that someone has gone into their pocket, is willing to pay for that product or service, and it has some meaningful value. Me predicting a venture deal is, I'm not a technologist, so revenue generation is important. Like I said earlier, a relatively short burn or clear visibility to positive cash flow. And then I have to be able to help and see places that you can have a material impact on the business. So not just, creating financial dashboards or something like that, but literally be able to connect a few dots, network-wise, that hopefully will drive value in the business.
More instantaneous connections,
Yeah.
without question.
Yeah.
Damian, I mean, you guys are building a community. You're looking at all types of different businesses.
Right, well, we're closer to Steve. I think we're definitely on, I'd say, post-traction. And a lot of our limitation comes from the fact that we haven't taken any outside capital, just Kevin and myself. So we're not going to do, at this point, the shotgun approach where we're doing, spread it out across a bunch of different companies and hope like 1 out of 10 hits it. He hasn't really come around on that mentality yet. I'm not really inclined to try to challenge him and get him to come around on it yet. So we're post-traction. The unknown unknowns that Steve's talked about are definitely very real. We're not going to know what the industry's curveballs they could throw at these companies. So yeah, once someone's actually taking money out of their pocket and handed it to the company, or they have some good partnerships that are willing to pay betas and that sort of thing, that's where we really start to pitch it. But we're going to probably be a little bit later on this.
The other thing I'd add, just occurred to me, that it probably isn't obvious, but one thing we really like, and I was speaking to one of the cohort group members earlier about this, is I think it's really important right now in this market is a willingness for companies to consider collaborating with other companies that are synergistic, even if they're not portfolio companies. Because I think you're going to see when you look at this market, you see companies like Sport Engine and Team Snap and Game Changer, right? Everybody's looking at these guys, and they've all done a great job of getting market penetration and getting eyeballs. But I haven't seen all of their financials, but I've seen a few. I guarantee you'd be shocked at their inability to really monetize the way you think they would. So inevitably, there is going to be a point. Those guys are all, 2 of those 3 that I mentioned are heavy venture back and smart money. They're going to stop pushing those guys together at some point. And I'd tell like a young company, don't be afraid to collaborate sooner than later with someone that you think is running a parallel path but not a competing product, because when the consolidation occurs, if you've got a little bit of a partnership with them, you might get sucked into that deal. If you don't, you're flying solo and you're going to watch the market go away from you pretty quick.
Second that for sure.
So with the companies that's in your portfolio, how active are you with them on a week-to-week, day-to-day basis? How engaged with you? Contracts? Just tell me how involved.
Yeah, so it's a little bit company by company, and what the entrepreneur really wants out of the relationship. So actually, one of the companies I'm working with, I wear a prototype around the office, so that's pretty day-to-day. Other companies I haven't heard from in a month or 2. We'll get involved in fundraising, we'll get involved in strategy, we'll make introductions to different VCs. It runs the gamut, and it's really where we're here as a resource. So we kind of put it in the ball in the court of the entrepreneur to say, hey, if you want something, we'll absolutely help you. We're willing to work with you. Just tell us what you would like, and let's execute together.
Yeah, so again, this world is relatively new for us, and it depends on the investment vehicle we're choosing. For our accelerator, it's going to be a day-to-day thing. Like we're sort of there with some programming, but mostly with the ability to provide help as and when needed. But at the end of the day, the goal of the accelerator is to attract talent to the city of Philadelphia from all over the world. And we've received applications from all over the world, which we're really excited about. And that's going to be more hands-on. Some of the later stage investments that we're doing, which are sort of B, C, D, that's going to be less hands-on. And again, we are only going to take positions in companies that we think that we can provide an impact. So at the very least, we're going to want to provide something to the entrepreneur outside of just our capital. But it really depends, as Collin said, it depends on the company, depends on the needs of the entrepreneur, and frankly depends on the stage of the company. So, yes, we will invest in companies across various funding stages. However, we also customize our touch points to what we believe their needs are, over the course of 6 months, a year, 24 months, however it might look. So
Understandable.
I think you have to customize it, and you have to personalize it.
Stephen?
Yeah, it varies. It could be, and if things are going well, it's a couple phone calls a week to stay in touch and check in on things. If there's something really interesting happening with a partnership or a presentation at a big brand, then I'll get really active with that. I'll go to a meeting. And then obviously right after you close on something, there is a post-closing strategic planning, financial modeling, and all of that stuff. So it flows, but, active, certainly engaged.
Combination.
Yeah.
No hand holding, but you don't want anyone going
When
MIA.
it goes to that point, then it's a challenge.
I would assume the same so for yourself, Dave.
Yeah, it depends on where we came in. If we led the deal, you're going to see us more involved with passive capital alongside smarter money, which happens sometimes. Then it's a little more hands-on. So.
I can't keep asking questions without opening it up to you all to ask a couple of questions while we have these gentlemen up here. Anyone have a show of hands, and we'll be sure to get a mic to you.
We'll just do it. Hell yeah.
Awesome. Does anyone have any questions starting out? Yes, sir.
What do you guys think the future of soccer is in the United States, and both for fans and for investment? Because at least compared to hockey and football and basketball, it would be really early to get in on that trend. What do you guys think is the future of soccer?
I could take
Repeat
this.
that question.
Yes, absolutely. The question was, what do you think the future of soccer is in the United States?
Yeah, one part of my day-to-day, which I did not mention, is we invested in a soccer team in Sacramento, currently USL. I don't know, I'm going to say there's, but one of the top performing USL teams in the US, and we're currently bidding for MLS. So we are very long on soccer as a fabric for the future of America. The quality of play has to get up, as baseball attendance stays flat, and hockey, who knows? Soccer is definitely on our radar, and we invest in the team. We're playing a day-to-day operation role in building the stadium. We're excited about the future of soccer.
Anyone else?
I would say at the amateur level, I'm sorry, just continue on the soccer, at the amateur level, participation rates are very attractive. What's challenging for us, because when we look at event operators, is that most of the sports are pretty fragmented. So, you get a lacrosse tournament that no one even knows the brand over here and another one over here, and there's very few sports that have a dominant sort of sanctioning body for amateur on the travel side, but not with league and rec. And soccer is actually one of the better organized, so it's hard for us to get into that market because U.S. Soccer sort of controls it really well. But I know it's a really strong market, and I would say on the professional side, which is the marketing arm of MLS, is owned by a buddy of mine, who is one of the large shareholders in it, and they're really smart, so I would bet if they're bullish on it, it's a pretty good opportunity.
And to give people context of where some also own the media rights in MLS. The last deal was worth $90 million, and the NFL is worth $7 to $8 billion. So it's about 77x of where it could go. I think MLB and NHL are around $1 billion. So just straight media rights opportunity is huge.
Yes.
So you guys are sitting in a forum for sports that kind of investment input that have very research one of the best products in the country. What are you seeing as kind of where that network is both where it exists today? Where do you see that going here in the next couple of years?
The question was, where do you see that network intersecting and going today?
Yeah,
And where is it headed?
Yeah, so look, I think can echo the views of our management team. Look, we believe that teams, leagues, sports properties are only going to get more sophisticated. There's going to be more and more. As the volume of deal flow grows, there's going to be more smart money that's coming in. Again, you're seeing a lot of sports team owners really put their money behind investment vehicles, which is relatively unique, that are focused on the sports media and entertainment space, because there is this feeling that, like I said earlier, we have this unfair advantage. We have the ability to see trends. We have the ability to monetize our fans. But I think the volume of deal flow that we have seen over the last, year, but you can go as far back as 3 years, has probably tripled, quintupled, because, and I'm not sure which is the chicken and which is the egg, whether the companies are following the money or the money's following the companies, but definitely believe that there's going to be more sports properties investing in everything from seed to later stage startups. There's going to be more startups that are looking to disrupt this industry because there are a lot of parts of the sports business that do require disrupting and are ripe for change. I wouldn't be surprised if a panel like this grows in size and you're going to see many, many more people up here talking about their investment vehicles and what they're looking for in the sports space. I have to believe that that's going to be the trend.
Yeah, just really quick, I think we're seeing an increase in data, which is leading to an increase in interest and an increase in growth and revenue and opportunity, right? So if you look across all sectors of where, as an investor, you could decide to deploy your capital, the sports space has to be one of the most interesting because it's so ripe for disruption. I mean, there are entire segments of this sector which are completely untouched. I mean, we talk about amateur. There's colleges, the D3s, the D2s. There's sports leagues locally. I mean, there's social media explosions, ways to aggregate that data and bring it and put it in your lap and have you start to care about it, right? I think soccer's got a great shot because the amount of data and interest is growing. So I can start to care about that. I can start to see that whether or not it's broadcast on one of the major networks. So it's a great sector, man. It's ripe for disruption. I think it's fantastic.
And I think one point in that, to me, the most interesting point, and in my mind, a good analogy, and I apologize to anyone here who works in the airline industry, but airplanes now have Wi-Fi. And there's still a discussion among sports teams whether it makes sense for people to use their phones in arenas. Most arenas still don't have the ability for tens of thousands of people to use their phones simultaneously. If a plane sitting at 30, 40,000 feet, if airlines have discovered that people and data are so linked and the necessity to be connected while on the go is so important, the fact that realization hasn't yet hit the entirety of the sports industry I think is one small example in showing how much opportunity there is. And for me personally, I mean, I cannot tell you the number of times that I've heard the words "because it's always been done this way." And in my mind, anytime you hear that phrase, like it's like the casino thing where it's like dollar, and then there's like ding, 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 ding. Anytime I hear someone use that phrase, that's what's happening in my mind.
That phrase gets you fired at Under Armour, by the way. That's why Lauren's laughing in the front row here. There's two ways to get fired. That's what
Gentlemen, I can't thank you enough. This is exactly what we're going to be doing for the rest of the afternoon is networking. If I didn't get a chance to get to your questions, please don't hesitate. Every single one of these guys are super approachable and excited to be here with us here in St. Louis. Thank you guys so much. We're going to be here for a while.